would you tell investors to sell right now? Or I don't know if you'd say buy. They've missed 27% already on the rebound. What should they be doing?
So I continue to avoid the binary issue of should you sell everything, should you buy everything, but go up in quality, sell the weaker ones. The big change, Joe, and it is a remarkable one, is that the Fed went into high yield market. That is a historic change. It is one that exposes the Fed both to the embracement of investors because they think the next step is perhaps equities. And on the other side, a lot of criticism, including from the Wall Street Journal, as to is the Fed doing too much for markets or too little, and too little for Main Street or not. So we are really betting on the Fed if you want to go in and buy and put risk on in a major way.
In terms of, and you have pointed out to me when we talk a lot, Mohamed, we talk on there, we talk off there. You've pointed out to me that you holistically look at everything. You look at global economies, you look at global central banks, and we specifically ask you about stocks. And we put you into calling S&P up this much, down that much. And so that's as much as our fault as anybody's. Do you think that this is a bear market route? And I'm asking you, I'm putting you back in that position. You may or may not, that may not be your expertise. You're a bond guy at PIMCO, and you know more about the Fed and everything else. But do you get the feeling that the stock market is underestimating the long-term effects of this in a way that it's drawing people in when they shouldn't be in because we're headed back down? Is that how you feel?
Yeah, I do, Joe. And let me explain that why these themes matter. Look, we moved and had the fastest correction in history. Last week, we had the biggest weekly uptick since 1974. These markets, when they move really quickly. And what do they move on? A change in the governing narrative. We are very sensitive to narratives. And the narrative last week, and it's a really encouraging one, is let's look forward to the restart. And we are all looking forward to the restart. And it's people like Ken Langone that are helping us understand what's being done on the medical side. And the second narrative that changed last week is, wow, the Fed is willing to do a lot more than we ever thought. So narratives matter, and they cause massive swings in markets. So the next narrative that's going to develop, I think, and this is my own personal view, is a realization that the restart is going to be really tricky and that the post-crisis landscape is going to be different. And that's the one that you've got to navigate through if you're a long-term investor.
Okay, so it still sounds like what I started off the discussion with about how people do change. Have you don't sound on the overall action in the stock market, Mohamed. Would you be surprised now if we hit new lows in the next 6 months or not?
Look, in this environment of enormous uncertainty, nothing would surprise me. We need to be great health experts to predict the market. You need to get a feel for how far can the Fed go from here. These are really big unknowns, Joe. We have no playbook to guide us. On the health side, do you feel confident calling for what's going to happen next?
No, I don't. But I feel confident that there's times when I think that the message of the markets can tell me something that I don't understand, and I won't understand until it happens. So I think bond guys, by definition. Did you see one of our friends, I think Barry Knapp, said bond guys, they can never get more than par, so they're always they're always pessimistic. So I think it's, right now, I don't know whether the market's trying to suck people back in as people, at these levels, more people can sell, or whether it moved so quickly last week because if you didn't have the intestinal fortitude to take a shot last week, you may have missed the first 27% of the bounce.
So a lot of times the market. I'll say the market has surprised us repeatedly. I think most of us I would certainly admit the market has surprised me repeatedly. And when that happens, you ask yourself the question, how much uncertainty is out there? We are going to have 2 or 3 weeks now of earnings calls where I suspect the majority of companies are going to suspend their forward guidance. They're basically going to say, we can't give you any guidance. We don't have clarity. The market is the accumulation of all these people who have no clarity. So we got to acknowledge that the amount of uncertainty in the marketplace is high. When the amount of uncertainty is high, the likelihood of a mistake goes up. No one wants to make a mistake. So what we have to ask ourselves is, what mistake can you afford to make? And I think that is the key issue for everybody watching that show. And the answer will differ